What is up, YouTube? This is the Working Investor. In this video, I'm going to talk to you about why I like Spyt as opposed to QQQT. And we're going to talk about why I'm not going to be investing in the NEOS products at this point in time. And then we'll talk about my predictions for the Rdte, what I think it may be. And let's get into it. So when it comes to Spyt, right? So Spyt, basically, why I like it better than QQQT is because if you look at Spyt, they're giving 20% distribution rate, right? And between the S&P 500 and the NASDAQ, what do you think is more stable when it comes to NAV? The S&P 500, because the QQQT is also giving very, very, very similar return distribution rate, but it's not fair because if something is more volatile, it has an increased implied volatility, I would expect a risk-adjusted return, a return that is proportional to the risk that we're taking, because QQQT has more of a chance of going beyond certain ranges. It's not fair that they're only giving 20 around the same percent distribution rate. So why would I want to take on increased risk without getting increased reward? So that's why for myself personally, I feel, and I'm a retail investor, not a financial advisor, that Spyt is a far superior product at this time because it's been much more stable compared to QQQT, and it doesn't really give you any extra benefit at this point in time. And now I was listening to the interviews. There's a product I was looking into called Spyi. They have this, NEOS has these products. They're ETFs. They have Spyi, QQQI, IWMI. They have the bond market, Bundi. Sounds like a delicious Indian dish that I once tried. And there's like Kashi, which is, I guess that's the T-bill, the 1 to 3 month T-bill. So their whole entire, if you notice, we're living now in the high yield dividend ETF realm, and high yield, and right now we're getting, you can get 100% distribution rate a year, 100+%, 80%, 50%, 40%, 20%, right? When you're giving out 12.34%, that is far, far, far inferior compared to what the competitors out there is giving. I don't want to bash anybody because you never know if this thing will turn around, and then I'll be investing in it and I'll sound like a hypocrite. But at this point in time, I don't think this is the right investment strategy for me. They do brag and they do try to market that because you see here, they're investing in the SPX, and they talk about the taxable, favorable taxable income that it's taxed at a 60-40 rate. I guess partially long-term capital gains, partially short-term capital gains. So because some of it is considered long-term capital gains, it's more tax favored. But if you're only going to invest and plan your life around taxable benefits, you may not be going for the best income producing products. If you get far more, you have to look at it as a tax adjusted return. And I want to even argue and say there are other investments out there that perform way better than NEOS, and I believe, you have to double check, I'll look into it, but I believe that they also provide similar taxable benefits. I do have to look into this. I'm not an accountant, but look at their returns. Now let's start looking at these returns, because they have all three products. I can start extrapolating what I think Rdte would be, because if you look at their S&P 500 cover call strategy, which they do, right? Granted, they do have a little bit of less of an expense ratio, but they're not as actively managed as the 0 day to expiration options. So I get it that it's not as intensive to do every single day or weekly payouts, or, so hence they only do less trades. I would imagine they have more of a competitive expense ratio, which is cool. 68 basis points versus like 95 or 99 or 100 plus. But if you look at, you see here, the SPY is 12.34%. If you go to the QQQ, which, it is a little higher, it's almost 15%, right? And if you look into their IWM, it should be higher than the SPY, 14.3. So it's between this S&P 500, the SPY, and between the NASDAQ, right? So yeah, let's just close this for a second. So now, the thing is, I was looking into the QDTE, right? Now, just to extrapolate. So when Roundhill, the Rdte and QDTE, if you look at their holdings, they're using two things. Number one, they're using futures, and futures, if I'm not mistaken, is also taxed at a what do you call it? At a lot, this also a favorable tax rate. It has that mixed tax rate. Just double check. That's not it. But yeah, and secondly, when they give their distributions, if you click on their they have a tax section. So you go to supplemental tax section, you'll see here they have these forms. Let's say the last payout. You click on the form, and it shows you that that, what do you call it? They consider it return on capital. I know that one of the YouTubers out there actually, I think, mentioned this. I think it was Hamburger mentioned it, the architect. So if you see here, when they gave the distribution, let's say of 26 cents, they say there's estimated net investment income 0, and return on capital, they consider that 100% return on capital. That's how they define it, right? And they talk about that, there's, if you've already received all your return on capital, then perhaps, it may not be taxable. So you have to speak to, if once you receive your entire return on capital back, then I think it may be taxable. You speak to an accountant, guys, but there seems to be some tax benefits. Again, don't chase after investments because of tax implications. Go for the best return you can get. Again, that's my opinion. And because otherwise, I think real estate would have better tax implications than stocks and whatnot. But there are other products out there arguably have similar in other ways to have tax benefits, excuse me, and have better returns. So that's why I'm saying I'm not really at this juncture the biggest fan of these NEOS products. And now my prediction why, like, to look into what the payment will be, like what kind of payments are we talking about with Rdte, what I would expect. And the reason why I love these Roundhill products, number one, they're doing options on futures. Like I mentioned, it's future products, and they're doing zero data expiration with overnight exposure. And it's really unique out there. And like I said, look into it, but it could be some tax implications possibly that could be somewhat favorable compared to non-future doing options on stocks itself and return on capital. But look into it. Speak to an accountant, please. Don't trust me. Look at implied volatility right here. You see here it says 18% historical implied volatility right there. We're going to focus on the historical implied volatility. Implied volatility means the higher the implied volatility, the higher you would expect the premium to be, because things that are more volatile demand more premium to make up for that risk, right? So the SPY has about 18.5% implied volatility, right? Let's compare that to the NASDAQ. Look at the NASDAQ, QQQ. Look at this, 20 historical volatility right here, 26.33. Instead of 18.5, it's a little bit more than 26% implied volatility. So you see that because the NASDAQ has more implied volatility, hence the premiums on NASDAQ products you'd expect to be richer, because you're getting more premium, option premium. That's why argument with the QQQT, why they offering, not the same, not higher premium. Even you'll see even NEOS offers more premium if you're relative to their SPY product. Look at IWM, which is the Russell 2000 iShares, and their implied volatility, instead of 26.33, it's a hair higher. It's 26.69. And if you remember from NEOS, their IWMI product was giving about 14%, and then their QQQI was giving almost 15%. For whatever reason, their premium was a little bit different, but it's very similar to the NASDAQ. But then if you look at the charts, right, let's go look into the charts. Let's look at the charts over here of the IWMI. You'll notice that, not IWM, you'll notice that IWM has been trading within a specific, they kind of trade within a range and then they gap. You'll notice over and over again that they let you go to the 5-year chart. Like you see, they were kind of trading in this kind of flat range. I mean, again, historical past performance is not indicative of future gains. And then it kind of has this gap down, and then all of a sudden it's trading within this kind of range, and then it kind of gaps up. It has these like ranges, and then it gaps, ranges, and it gaps. But it does have a certain amount of, predictability in a way, in a sense. But again, nothing, everything is predictable until it's not, right? So my prediction would be that the the Rdte, which I'm so pumped about coming out soon, I feel that I would expect that their premium in Roundhill would be somewhat similar to the NASDAQ, maybe a hair above or maybe a hair below. But I would imagine it's, look how, pretty much the capital I would imagine would be relatively flat, for the most. It doesn't have ever positive drift. It does have positive drift. Compare that to QQQ, of course, it has probably similar volatility as QQQ, but QQQ doesn't have that. Well, it does have some tops, but it's a little different. It doesn't seem to stay within, like it seems to like either trending down or trending up. It doesn't have that flat top type of situation that the IWM has. So yeah, that's my 2 cents. That's why I'm not investing in NEO's products. I think that they are inferior in return at this point, in my opinion. I feel like it's the tax benefit. I feel like there are other companies that may also offer them. And even if I'm wrong, and even if Roundhill doesn't have that same tax benefits, dude, if I'm looking for tax benefits, then I'll go to treasury products. You know what I mean? Then why would you want to, or go into real estate or something? Like if you're getting inferior returns, why would you want to do that? And another thing I wanted to mention is Spyi. If you look at their, you do have a lot of market risk. You know what I mean? Like it's very, very volatile. So you're not getting that clean, like if you compare it to Spyt, look at Spyi. You see, it chops up and down, up and down, up and down, up and down. So it is up overall 1.86%. They claim that you do get a lot of market appreciation, but if you started August of 2022 and it's only up about 1 to 2%, obviously I wouldn't expect it to perform as well as the S&P 500 for the past year, because by definition, if you're running covered calls, you're capping your upside. That's for sure. They do it on the SPX. But I would expect, maybe a little bit more than 1 to 2% up. They only captured like, maybe 10% of the upside. So they lost 90% of the upside. But then that's their argument. But if you compare it to Spyt, again, things could change. People, past performance is not indicative of future gains. It's only been around for a shorter period of time. So it's hard to really extrapolate because you don't have as much data. But it seems like it's been pretty stable, except for that little dip there and back up again. It's been pretty stable. Again, it's also Spyt is obviously a different strategy. Spyt is covered, call credit spreads, not covered calls. But then another way you could compare it to is FEPI, because FEPI, it's not the entire NASDAQ, right? But FEPI, if you want to compare QQQI to FEPI, because FEPI also does covered calls on 15 strong stocks of the NASDAQ, but FEPI has been a little choppy, but mostly NAV stable, and they give a 25% return. I don't think they have the same tax implication, but you're getting 10%. At least you're getting, instead of 15%, you're getting 25. You're getting 10% more return. So you have to, versus QQQI, the NEO's product of QQQI. If you go back about a year, you know, 50. I guess it's around. It's also kind of now stable, but you're getting 10% less dividend payout compared to that. So I don't know, guys. Right now at this point, I'm more on the Spyt. I'm more on the Roundhill products. That's where I'm leaning towards. I'll keep my eyes on the NEOS if things change. Maybe there's some other benefit that I'm overlooking with NEOS that I'm not aware of. If there is, let me know. Let me know if you guys own any of these NEOS products, let me know. This is the Working Investor, over and out. Hope you guys have a great day.